rocks. And you just got this. What's up, everybody? Happy New Year. God, I don't even know. You know how long it took me to get used to today being Friday? With these days off, throwing you all out of whack. Can't do the Thursday webinar. We have days off, holidays. Ridiculous. I was hoping we would get commercial Sharpie data today, COT data, but because of the Jimmy Carter holiday, we don't get it today. We get it tomorrow again. I just want to post a few things. See, definitely some interesting things out there. I just trying to dig them up last minute. Hold on. This I definitely want to talk about. There was something. Oh, yeah. Where's that? Let me see if I can find it. Hold on. Where would that be? Today is Friday. We should get an updated one here, too. Hold on. I could post as we talk, too. Bear with me, guys. Give me a second. 1 second. Let me see if I can find it here. Oh, you know, I think I find it this way. Yeah, let me try to search. You gotta be kidding me. Twitter searches for the birds. You know that? Stock twits, maybe. Better. Hold on. No, I can't do it that way either. There we go. Okay. And let me post that for now anyway. I posted it in the wrong place. How's everybody doing? Yeah, right? The holidays throw you off too with the days? It's ridiculous. I'm confused enough in this game. Cents, why is it flying? Unbelievable. Like these penny stocks are the best plays out there these days. 85 cents. Just threw me off. I thought it was the one we traded, the SES, Shank. Insane. All right, let's talk about a little bit of what's going on backdrop wise in the market, okay? Because I think it's something. Obviously, you could see just a different complexion to the equity market, most risk assets in general, and there's a few things going on. Okay, let's talk about some of the headwinds. Okay, some of the headwinds out there that were actually have been tailwinds for so long. We've been talking about them recently, how the climate has started to change. Okay, it's been a gradual change, I guess is the best way to put it. But some of the things out there, like liquidity, like financial conditions, like some of the risk appetite has started to wane out there. And that's the first thing I wanted to talk about, because that's what I think we're dealing with in regards to the overall equity market. And I think the main takeaway from all this stuff is that the game becomes a lot more difficult, right? If you rewind to November of last year, just a couple months ago, I mean, a lot of us were having a field day in penny stocks, as you know, who could find the next penny stock that was going to double over the course of a couple of days, right? So you went from a really high speculative environment, right? And usually those are the signs that you're getting close to at least, and if not an end, a pause to what we've been seeing. Rewind to 2021, March, April, June-ish, around there of 2021, when a lot of those SPACs and a lot of those Cathy Wood ARC names really finally started to roll over, the meme stocks, right? So it doesn't always have to be something as cataclysmic as that. It doesn't have to necessarily bring a permanent end to a trend, but a lot of times you will see that type of behavior, that sloppiness, if not an end, at least a pause to a bullish, heavy risk appetite type of trend, right? So that's kind of what we were seeing. And, fast forward to where we are now, you remember we went over a few things, right? First and foremost, if to refresh everybody's memory, I mentioned to you guys how, for me, and almost at times I can be too disciplined because it's something I've worked on and drilled into my head over the many years that I'm in this game. But kind of my seatbelt that's protected me from giving back a lot of the profits I've made in good times has been the flow, right? A lot of people, especially now as popular as it is, the options order flow, people are looking for ideas, right? They're looking for unusual activity in specific names or large bets in specific ETFs. And that's solely what the flow is used for, right? I think one of the biggest benefits for me for the flow was a measure of the appetite out there. And if you guys remember me saying plenty of times on this webinar and even in the Steam Room, my biggest hurdle, my biggest problem in this game was, I came to the conclusion that when you're in a bull market, almost everybody's going to make money, okay? Unless you're one of these perma bears that try to get cute and short in a bull market, anyone who's playing alongside is going to make some money, right? If you get a little more luckier than the other person, you'll make more money, right? But in general, I had no issues making money on the upside. My biggest problem was every time that there's some sort of correction, right, or some sort of lengthy consolidation that followed that bull run, I would always give back not only the profits I made in that upturn, and then some, right? So I would go P&L wise green to red as soon as a pullback or a correction rolled around. And one of the main reasons was that I had no risk management. I just continued to get long while the good times were around, and I had nothing to measure when we may be closer to an end of that bullish backdrop that we were seeing. So one of the I look at a few things, and as you guys know in the Steam Room, we look at several things now. But one of the simplest things that I still use to this day is the option flow and sweeper activity. If I'm not seeing aggressive buying showing up in new names, new setups, and all we're seeing is the same hot momentum names, basically the leaders of this round of momentum that we've seen in that speculative environment, if they're the ones that continue to see all the action, and we talked about that, the majority of that flow is rolling activity, right? Profits just keep rolling up and out as people still want to be a part of that trend. That is usually a great sign for me of caution, to at least chill out And if you remember, I think put into even simpler terms was the perfect time to ask ourselves, okay, what if we're even willing to give back any of the profits we made, how much of it are we willing to give back? Right? If you remember, we were talking about that question, and that answer could be different for any one of us. Right? Some of us are younger, more aggressive. We're willing to give back a larger chunk of the profits to be more aggressive. Some of us are more conservative and only want to risk a smaller amount, want to hang on to the bulk of the profits. Sometimes it could depend on how much we benefited off these bullish times of recent, right, to determine how much we may want to give back. But when you start to see the flow heavily concentrated in the same names, even if those stocks are continuing to go higher, that's irrelevant. If the flow remains in just those same names, that's a perfect early warning sign to start asking those questions. Okay? Because what that is a signal that some of the more speculative money on the professional side, okay, is they're not looking for new places to put on risk, right? What they're doing is they're rolling in some of the biggest and best winners out there, and they continue to roll their profits, right? But at the same time, that rolling activity is bringing in more retail participation as they chase the names like an RGTI up over 20, right? Or an Archer and a Joby at new highs, okay? And again, some may get away with it, right? If you're tactically trading, you could be in and out, and sometimes in these new high moves before they even roll over and go into breather mode. But they become a lot riskier, okay? So overall, we started to see that, right? The more aggressive activity continued to be in these quantum names, in a lot of these more speculative names that were the best performers. Yeah, there wasn't really much risk appetite in anything else. So we started to see that undoubtedly. And because of the holiday season, I think it stood out a little bit more because the volume started to wane in other places that didn't have that momentum. Okay. And on top of that, what's been happening more, I guess you could say on the macro side, several other things have been lining up with it. Okay. So while things still appear bullish, while the price action still looks strong, right? While certain names continue to make new highs, okay, you had risk appetite of the flow start to wane, and some of these other major macro things that we pay attention to that pretty much indicate the same type of stuff, start to chill out. And let's look at a couple of them here, okay? This is credit default swaps. I go back to that in a second because I think it's good if we go back to that after this. These are credit spreads, all right? So these are corporate bond yield spreads. And in the more risk-on environment, right, like we said, when the action's broad, when usually it's a climate where you don't necessarily need to get lucky in what you buy. You can accidentally buy something and make money just because of how bullish the environment may be. A lot of those type of environments always are confirmed by other signals, like the credit market signals. Okay, and as you can see here, even before the election, I inverted the indicator here. Okay, you guys are familiar with this. You have credit spreads pre-election really start to tighten up, even without the market going anywhere. All right, so that was a sign of basically there wasn't much concern about the election, and players were looking to put on more risk, right? They were taking a lot more risk out of the equation. And that continued post-election all the way up into the end of the year, basically, a little before the end of the year, as you can see here. Then we started to flatten out, and you started to see a little bit of a divergence that continued here, right? So if you could see here, a lot of times the market should be correlated to these signals. You see the market continue to make new highs. Stocks, like some of these speculative names, continue to make new highs, but this starts to diverge and go in the other direction, right? And now you could even see it even more drastically here as the market plays catch up. So again, not to get into the logistics, a lot of you guys know what this indicator is showing anyway, but this is basically showing bond spreads, whether they're tightening, okay, or widening out. And just to give you an example, credit spreads were at the tightest levels we've been even before COVID. Okay, that's how much risk was coming out of the bond market. No concern. Almost a lot of people were taking it as a sign of complacency. There was so little concern. Okay, and you can see here, this is nothing drastic by no means. Okay, this is not telling us that there's a big issue at play here. But what you'll find if you follow things like this is a lot of times when spreads and swaps are widening out, okay, at the least, it becomes a lot more difficult to make money on the long side in risk assets, right? At the least, you're going to get a choppier environment, less participation, if not an outright drawdown in equities, okay? And again, I want to make the point that it's nothing catastrophic, because again, if you look at credit default swaps, which are kind of a bigger picture on the macro side, okay, of things, not company specific, you really don't even have too much of a divergence here. It's kind of trading alongside equities in a sense. So even though we're seeing some of the things we look at for bullish momentum and stuff like that start to deteriorate, the bigger picture signs aren't pointing to anything catastrophic happening behind the scenes. And that's what we're seeing on this indicator. Okay? Just again, some of that risk appetite starting to come out of the markets. What happened here? What is that? How come that didn't post? And that's the one I want to show you guys. Hold on. I don't know why that didn't show. 1 second. Another thing, I haven't really talked about it too much on this webinar, but you guys in the Steam Room have seen this before. Goldman talks about this a lot. These are funding spreads. Okay, let me get the little write-up on it so I don't butcher it. Hold on. Okay. All right, these are funding spreads. And what they measure in simple English, and I think it says here, basically the pros out there, right, via futures, swaps, options, that sort of thing, whether they're taking on more risk, right? So again, simple English, more, they're putting their money where their mouth is, more on the bullish side of things, or if they start drawing back some of that leverage, right? Which means they're taking some of that risk off the table for whatever reason, okay? And a lot of times what you'll see with this indicator, and Goldman does a great job of talking about it when it arises in these situations, sometimes you'll see leverage start to come off, right, before even things like the equity market start to deteriorate. Okay, so you'll see some signs of the pros selling and taking some risk off the table even before equities react in a sense. Okay, so you get a little early warning signal there. And that's kind of what we got here. If you could see here, the dark blue line, okay, measures these funding spreads. And the light blue line is basically the SPX, right? And you can see this aggressive drawdown here, right, into that pullback, and it continued even though equities kind of caught a bid and rebounded in a sense, right? So even though the overall market, after a little bit of a pullback, bounced right back and everything looked like it was peachy keen, right? Pros were still taking risk off the table into that bounce, right? And that's what it's showing here. And again, it doesn't have to end up being an animal catastrophe at the end of this, right? And I think that's what a lot of perma bears try to put fear in bulls, or just even retail traders in general, that when you start to see some of these things, it means the end of the world. Okay, that's not the case. Now, again, sometimes it ends up being a major topping signal, but a lot of the times it could just be a pause, right? So that's what we're seeing here now in the funding spreads. And Goldman had a little write-up, I figured that you guys Reduced equity demand from pro investors in future swaps markets increased the potential for volatility this quarter. All right? So even them, they're not making it out to be some huge drawdown they're anticipating off this. But if you back test the indicator, okay, the majority of the time you'll see at least an increase in volatility when you see a reaction like that. All right? And that's kind of what we've been seeing. Here's another thing you guys may be familiar with coming out of the 2022 bear market. Okay, and you can't even see it on this chart anymore. But these are financial conditions. Now, again, depending on the indicator, Goldman has an index, Bloomberg has an index. There are a few of them, maybe 5, 6 that I know about. A little bit different than each other, but generally the same premise, right? You have a few things that go into it. Interest rates, equity prices, stuff like that. But what I've realized over the course of my career, because all I care is how the equity market is going to react to it, right? Because that's what I play. When financial conditions are tightening, okay, the machines, algos go into auto selling. And what I mean by that is every rally seems to be sold as financial conditions tighten, right? And the further they tighten, what you'll start to see develop in the price action of, let's say, the overall market is a downtrend of lower highs and lower lows, right? And that's the idea I'm giving you guys, where every rally finds sellers. The complete opposite of what we see when financial conditions are loosening. Right? So if you remember the 2022 bear market, okay, because the Fed was tightening purposely to battle inflation, right? All you really had to do was look at financial conditions and understand that even though at times, period of times, the market looked like, maybe the selling's over, there was a high probability that those rallies would find sellers at some point, right? And you get that downtrend. And then as financial conditions stop to tighten or even loosen, that's where you start to see the adverse effect from it. Okay? And this chart showing from, you could take even net from December, September, but really here in late November, financial conditions really start to tighten here. Okay, I shouldn't say it like that because it's not that significant, right? Some people think the Fed really isn't even tight yet, right? But you're seeing something different here, right? You're seeing something different here. You're seeing financial conditions start to tighten, almost form a trend. Okay, now if this continues to happen, again, it's really going to put you behind the 8 ball trying to get long on a swing trade basis any equities. Okay? Maybe there's a name or a pocket here and there that bucks the trend. Okay? But the odds are against you. Right? And that's how we got to look at this game. Right? So right now, financial conditions have been tightening up to this point. And if that continues, something you pay attention to, you probably want to take these squeezes off the table if you catch them. I think that's the simple takeaway. All right. But again, something else we're dealing with here, right? So you got funding spreads that started to roll over. You got liquidity, which I'd even mentioned, global liquidity that has started to roll over. You got financial conditions that have started to tighten. You got credit spreads that have started to widen out a bit, right? All these things were the complete opposite and bullish for a lot of the rally we've seen. And now they're different. Okay? So, there are, I don't want to take up too much of your time because this is a public webinar. A lot of you guys aren't even too familiar with this stuff, but I think the main takeaway is that a lot of these things were a nice tailwind behind most risk assets, especially equities, and they've started to turn, Okay? The good thing is, most of the time, right, either via the Fed doing something, the Treasury doing something, or something happening in the world economically. Um, uh, I don't even want to say a terrorist attack or anything like that. You're not rooting for that, but something goes haywire in the world where the Fed, right, has to start talking a different game or has to act differently. Okay, so a lot of times when things have a tendency to get too tight, they end up reversing and creating a unbelievable long opportunity in the equity market. Okay, so even though it can be short-term bullish and maybe linger for a little bit longer than a lot of us would like, if you're patient enough, right, and you're paying attention to these things, eventually it does line up a pretty sweet spot entry on the long side. Okay, but in the meantime, I think the playbook, while trying to deal with this and get through this, is one, to be a lot more disciplined, obviously, and selective than you've been the last couple months, right? I mean, we've come from an environment where we were looking for whatever penny stock was seeing any little bit of flow and hopping on to now really paying attention to where the overall market is at, where some of the sentiment measures are at, right? Because now I think we're more, what we're focused and what we're looking for is to capitalize off squeezes, right? Off these bounces, okay, that are generated off financial conditions loosening over a week, right? Credit spreads tightening up a little bit over a short period of time. These are setups that you want to try to catch these type of squeezes and sell into that move. Okay, as opposed to whenever we reach that point where that trend is coming to an end, and that's where you kind of want to look to start building a basket and giving a little bit of a leash to, right? If you guys remember in the steam room, we were talking about, like I was getting the question, because of some of the sectors beat up out there, some of the stuff looks appealing on a longer term basis. But I mentioned to a few of the steam room members that I was kind of hesitant to even start nibbling at some of these things, only because a lot of the signals we're pointing to, that we're looking at, are pointing to some sort of breather here, some sort of pullback. And until we see what that looks like, it kind of doesn't make really a whole lot of sense to put any money to work, even on a longer term basis, right? Do I want to be long ahead of that? Now, again, you can make the argument, and some of you have, and I can't rebut you, that there are groups that have been beat up enough, right, that have already sold over the last few months, okay? And maybe they hold up better. Maybe they see rotation and outperform to the upside in this type of environment, right? We've seen that even in the 2022 bear market. Remember, commodity names, because of inflation, outperformed. Energy names were the sector throughout that 2022 poll. So that certainly can happen, but what I'm getting at is you probably want to wait to see more information before you get aggressive and get too early on that trade, right? So now we're starting to see a little bit of this transpire, and each and every day we're going to get more and more information, especially now we're going into earnings season before you know it, on what sectors may see rotation and possibly buck this trend if it continues. If this continues at all, maybe post January OPEX we see a completely different animal. Okay, so that's why I think it pays to be patient and just keep the eyes peeled. So those are the negative things, right? I think what's preventing from the price action to see much velocity on the downside, okay, is, in other words, we just looked at everything pretty much pointing to the bearish column of things, right? And the market's what? 2-3% off highs? right? Nothing. Okay. I think the reason things haven't accelerated in a sense to the downside, in my opinion, is because you still have huge pockets of this market, and this is something we've been talking about for a while, even in good times, that you know are underowned. They never participated in this bullish price action that we've been seeing at the end of the year. Okay, you got important pockets of the market like housing, materials that just can't catch a bid right now. I can't catch a bid, and they've been like that for a while. So that's why, because of that performance in a lot of things, you have huge pockets of this market that are underowned. Nobody's long these things. So the only selling at this point is going to be shorts in a lot of these pockets, right? And you see that show up in things like this, right? This is the hedge fund exposure measure we look at in individual names. And you can see, right? They never got caught really long at all. Like this is literally right on the zero line right now. Okay, so they're not short, they're not long, they're net neutral. But that's because they don't own any of the groups I just mentioned. Like materials is lining up here on a longer term basis as one of those trades, those contrarian trades, where you got everybody on one side of the fence. You have no long exposure on that side of the ball. Right? So that's one of the things, in my opinion, that's propped up, held up these markets in a sense, right? Because you have, like the quantum names that took a haircut off the NVIDIA CEO mention, and you have Apple that really traded lower in a straight line for the last couple of weeks. Even though you see things like that, you have some of the things like I just mentioned that are already significantly oversold. And even though they're not bouncing, they're not really accelerating to the downside either. Right? So that's one of the things kind of playing a little tug of war action with all the bearish things we just went over. Another thing is retail participation. Right? Even though, again, housing, materials, energy up until recently, all these groups can't have no interest and can't bounce, retail has been doing cartwheels, right, in a lot of the stuff that retail likes to play. So retail participation has been really aggressive over the last month or two. Okay? And even more so in fund flows. All right? Remember, we just recently saw, I think for December, the largest increase in fund flow that we saw in the last couple of years. Okay? January as well. Probably see another influx of ETF fund flow coming in. Okay? Those flows, too, are beneficial, right? Money coming into the market being put to work. So they also create a bid in a sense. And that's why I think rather than seeing more of a more accelerated sell at times, you see kind of this tug of war type action. Now it's going to be interesting when this month is over and you lose some of that, fund flow bullishness in a sense. If we're still seeing some of these forces, right, some of these tailwinds on the other side, it's going to be interesting to see how the market reacts without some of these things propping it up. Okay, so that's kind of why things have been a little choppier in a sense, where you see these pretty vicious snapback rallies, even if they just last a day or two. So what that does is make the short side at times just as tricky, right? And even knowing that you're starting to see some of these major tailwinds start to fade, right? They still don't make it that easy where you can go out and short, right? Because of some of the other factors at play here. So all that being said, and it's a mouthful, it's a tough trade right now. It's just a tough trade. And again, I get trolled for this at times, but I mean, it is what it is. I'm I'm not interested in going after the difficult money. Okay? I'm just not interested. Call me whatever you want. Call me a coward. Call me I'm not a real trader. I don't give a shit at this point what anybody calls me. All right? But I know from my experience, when I get in this type of climate, okay, at best, I'm looking to break even. It feels like I'm always trying to break even. I catch a nice profitable trade, but I'm still down net since I'm trading in this environment. So you reach a point in your career where it's just, you get tired of that. It's not worth it. It's not worth the agita. All right? So I'm going to be a lot more selective in this environment. I can't find a damn thing to trade. I can't find a damn thing to get excited about flow-wise. I'm just like any one of you. I'm going to get the itch at times to find something to hop on for at least to try to trade intraday if there's a drought. But the main premise here is that I want to do a lot less when these things are taking place, right? And I'm willing to get sloppier, in a sense, more aggressive when I got some of those tailwinds at my back that can bail me out. Everybody points to, and you see this throughout the day too, not in a negative way, but you'll see it in chat rooms or on Twitter. People point to the one stock that they see that's really up nice, right? But that's one stock where I can show you 10 others that if you would have bought, you would have taken a hickey, right? And that's what you got to realize. That's what you got to realize, okay? That's tough money. That's hard money you're trying to make there. Not to mention those of you who play options are, especially as we go into earnings season, are paying, are playing elevated IV in a lot of these things. So these premiums are going to be expensive, right? The old adage is when VIX is rising, you want to stick with equity. And when VIX is low, that's when you want to roll the dice in options. Right? So as there's volatility and as you approach earnings season, these premiums are going to be a lot more expensive. It's going to be even more difficult to make money trading. All right? So the less you do, almost always the better off you are when you're in this type of environment. Right? And even if you're late to the more bullish environment when it turns, right? Even if you're not in at the lows when the turn actually happens, even if you're a little late to the party, as long as you show up, you're likely going to make some decent money, right? As long as you're not shorting into that, you're likely going to benefit off it, even if you're nowhere near the lows. And it's going to be a lot, I hate to use the word easy, but you guys know what I'm saying. You have a lot more probability on your side at that point. You have a lot more probability on your side. Right? So I think that's the main takeaway. And like I said, it's been a mouthful, everything I just said, but I think that's the main takeaway of everything I just went over here. That you have things that we look at that are pointing to a difficult environment, a tough trading environment out there, right? So the playbook for that environment, if you're going to play, okay, you want to look for entries off of weakness. You want to look for entries where sentiment lines up, okay? Doesn't mean those things can't fail in this environment, because they do fail more in this type of environment. But again, when you look at things through a probability or an odds point of view, you have a higher probability of success than chasing green in an environment where they're selling green. Right? So that's kind of what we're looking at here. We want to see how things play out the rest of the month. And what we're going to see, one of the the constructive signs we're going to start to see. We're going to start to see the flow improve. We're going to start to pick up on pattern buying. There's no pattern buying at all in the flow right now. You know, you'll see NVIDIA call sweep weeklies, then you'll see NVIDIA put sweeps weeklies, you'll see Apple put sweeps, you'll see Google call sweeps. There's no pattern. It's like a mosh pit. It's a hot mess. Okay? When things start to look more constructive, you're going to start to see some of that pattern buying show up. Oh, they're making a play on these Mag 7 names. They're coming after Google, Meta, Apple, and Microsoft. Right? Oh, they're coming after the semis pretty aggressively here. Or they're coming after small cap space names or whatever cockamamie thing they find at the time. Well, we were seeing that a lot in the more speculative names. Right? They're playing quantum names. They're playing space names. They're playing, what was the other group? Bitcoin miners, whatever it may be. But you start to notice more of that pattern buying. You know, right now, what we've been seeing is a lot of cheap lotto crap on both sides. And, you know, there are a few respectable bets, I guess is the best way to put it out there. We saw a couple today, right? One was Bros, caught some April call buying, and the name looks pretty strong. Another one was RH, okay? Nothing wrong with that. The problem is the climate. That's the problem. The climate, right? Because now you solely got to rely on just those orders for you to be right and cash a ticket, right? Where in a better environment, you can get help from the market, you can get help from other call buying within that sector, right? There are other things that can bail you out, even if that call buyer you're telling is absolutely wrong. Here, it's almost like you're trying to find the needle in the haystack. Okay? You're buying, again, example, and stock looks good, so it could go higher, but you're buying Bros, hoping that that name bucks this trend. That's generally what you're doing. And not that it can't happen, but, again, probability-wise, it's just not as strong. All right. I mean, anybody have any questions to what I've been talking about here? You got the basic premise. And again, and we talked about this. I was joking around with like Sahil in the room. You don't want to get too bared up here, right? And not to say, I don't know, this could end up being a 10% correction, which will be, a lot more painful than where it is now. Okay. I have no idea. I don't think you ask anybody, nobody knows. They can bullshit it, but they don't know. Okay? But what I'm saying is, at this point, you don't want to get too bearish because more than likely the reward is going to be the long opportunity that presents itself when this thing plays out. Right? That's more than not usually how these things resolve. There is that one occasion that ends up being some major downturn or major correction, right? There's certainly a possibility of it. But what's more likely is you get a normal rinse here, whatever it may be, and when the turn comes, there's going to be some decent opportunity if you have your eyes open and you're not, hoping, praying, and betting on the apocalypse. Right? People don't want to hear chill, right? They go, do I get long? Do I short the living piss out of this? What do I do? What do I do? Right? They don't like to hear chill. Chill. Just chill. Right? Chill out. Chill out. And that's kind of where I think we're at here. Okay? For those of you who are more tactical time frame wise on a short-term time frame, especially off today, we're getting close to squeeze setup on short-term time frames. So I'll give you a couple of things here to look at. Here's one of the measures we look at, right? Short-term composite indicator. Under 10, you usually got a high probability for a squeeze. We were kind of, I think, 19, 18 coming into today. Get a strong possibility. This dips under 10, which can signal a potential snapback squeeze type of thing. And usually, if and when you do get a squeeze, usually it's rewarding enough, when you get it under 10. Now, again, you get into a more violent correction, or you get into a 2022 bear market, what's likely to happen, you get, a one-day bounce type of thing, and then you sell from there. And these signals fail. Right? But I think that in itself is a signal as well, telling you that this may be different. So on a short-term basis, going into an OPEX week and a busy week next week, we could be lined up for a squeeze going into next week. Things to keep an eye on too, right? This is something else we talked about. And again, I just don't want to litter you guys with too much, but you guys look at a lot of these things to begin with, right? We talked about kind of VVIX being a good indication of whether these rallies would start to roll over or, continue. And what you've seen here with VVIX, right? You get that pop when kind of everybody thinks the coast is clear, right? Everybody's okay, but still the same things in the background are still a problem, okay? You get this rally in VVIX, and a lot of times it starts before the equity market rolls over, okay? So on the flip side now, as we go into next week, what you would want to see is you would want to see this unwind, kind of like we've been seeing here, right? Some aggressive selling. And that would give a green light for a pretty decent squeeze to get in the middle of. But, if you're seeing a little bit of a bounce or, even a little bit more weakness and this VVIX continues to be strong, you don't want to be too early on that because you're getting in the middle of that selling, almost like catching a falling knife, right, on the long side. There still could be some aggressive sell-off. So you want to see it start to unwind, start to see the selling pick up, and then kind of look for a squeeze opportunity. Right? So these are, more on the tactical side, a few things to keep an eye on. We discussed this the last couple of weeks, VVIX and stuff like that. So it's it. And, the health of the market too, right? And I know it sounds corny, but it hasn't looked too healthy. It really just hasn't looked too healthy. Okay? As much as people are excited about these quantum names being the future, I get it. Okay? They're all story. I don't care what anybody tells me. Rigatoni alla vodka, okay, is just reported in their last quarter $2 million in revenue. $2 million. Okay? So what are you going to tell me? They're growing at 400%? Whoop-de-fucking-do. The stock's up 8,000% from the lows, and they got $2 million in revenue. You have more sales. You know what I mean? So these are all story stocks. Now, if the Fed, right, and the Treasury are going to print money, right, and QE and all that shit, yeah, you buy them. Okay? You buy them. Just like you were buying the EV names in 2021, just like you were buying the SPAC names in 2021, and nobody gave a shit about fundamentals. Okay? But if you got financial conditions starting to tighten, liquidity start to dry up, okay? You remember 2022? Everybody starting to talk about earnings again. Everybody started to talk about fundamentals again. Right? Remember the small cap, micro cap stocks? All those Kathy names, all those stocks couldn't catch a bid for the life of them. That's the environment where these things just are dead. Are dead. So you don't want to see, right? And we talk about this. People think I love trading these names. I love trading these names. We all had a ball, and anybody who participated made money, right? Some of you killed it in these things. My point is that these aren't going to lead a market, these type of names, right? It doesn't show a healthy market, right? Now, if you got RGTIs profitable and they're growing those profits at 100% year over year, that's a different story, right? You got a group of names, potential new leaders to that effect, that's a different story. But you're talking about really speculative names here, just based off a story 3-4 years down the line. Okay, they don't lead. Okay, they participate in the speculation. They're involved. It usually comes at the end of a bull trend. So the market hasn't looked healthy at all of late, at all, right? Like some of those sectors I mentioned. Have you seen some of these things? Right? Like, okay, materials. Right? Forget about materials. Who cares, right? Nobody likes materials to begin with. But look at this. All right? Hey, you're talking about a legitimate correction in a major group. Housing, the homies, right? Pretty decent drawdown compared to some of these other things, prior to the last week or so have held up pretty well. So, again, it's looking in the rearview mirror a little bit. You don't want to get too hung up on it, but internally, healthy-wise, as far as the market health is concerned, hasn't looked too hot. Now, that could end up being a good thing eventually. You get to a point where things are just so washed out, right? That basically all the bearishness is priced in a sense. In some spots you may be getting there, but not yet in its entirety. We'll see again after today. We'll see again after today. Yeah, there's no, listen, again, when you see that speculation, okay, it's not always the end of a bull market, okay, but usually comes before some sort of drawdown or pause. When you see, just these speculative names, right? Like it literally got to a point where if the stock wasn't under 5, we didn't even want to look at it, right? Because nothing else was really working. Apple was selling off, right? Coming in a straight line. Yeah, you really had nothing working at all, but just these smaller names. And, that's not going to last. That's not going to last. Like even the COVID lows, okay? Like if you want to talk about like the start of the COVID bull market, you had these stay-at-home names, but they were really starting to show some numbers, right? These software names, they were profitable. Their growth was insane. Now, they eventually got too expensive after that run, but they were legitimate potential leaders. They weren't $1 million in revenue. They were legitimate growth names. This is purely speculative, all story, right? Totally. So, again, it doesn't have to be the end of a bull market, but it's usually the end of something. It could be just the end of that little speculation. Right? Ideally, and we talked about this in the past, they're my favorite type of names to play. Ideally, what you want to see start to break out or new names emerge are the RBRKs of the world, the APPs of the world, right? Those type of names. That's what you want to start to see potentially lead or emerge. That would be a healthy sign, right? Because not only is there a story, you kind of almost got to dig for the story. It's the fundamentals that you notice initially. And then you're like, oh, they're tied to AI. Oh, they do this. A lot of times we don't even know what they do. APP, I didn't even know what the hell they did for the first few months when that stock started pushing higher and they were buying it. Right? VRT, this one, I had no clue. I'm like, what is this? A utility? What the hell is this thing? All right? But, you look at the numbers on these things, like they had real numbers, real growth, $1 billion for the quarter. Not 1 million, $1 billion. All right, so you want to see those type of names start to emerge if they're out there. I don't even know if there are any new ones out there. But the speculative guys, and you see like what they're trading, what are these names trading with, right? The RGTIs, the quantum, alongside other squeeze names, right? Other heavily shorted names that are squeezing with it. It's all speculation, all short squeeze and retail participation. That's all that is. That's all that is. Not all of them, but the majority of them, there's no fundamentals backing that stuff up. It's story. All story. All right, so that's the story. Anything else? I don't think there's really anything else. Name-wise, again, what we've been seeing is some buying in leaps. All right, some of these beaten up names, we've been seeing some buying in leaps with time. We talked about this already. If you're seeing 2026 buying and you're going to be pissed off if the stock heads lower over the next month, then you can't buy it. Okay, 2026 is a long time from now. They're starting to buy in 2026 strikes because they feel they need a long time, right? That's one way to look at it. So if you're tailing action or buying that is showing up in leaps, you cannot get pissed off if the stock you're involved in is lower over the next couple of weeks or months. Right? Again, most of you know this, but I'm just saying, you almost got to expect when you're seeing leap buying in this environment to be early and underwater. Wait, you think you're going to nail the bottom on all these things? A lot of these names are seeing heavy selling. Right? That's kind of what makes them so appealing because they've sold off so aggressively. All right, so we've seen a few names catch that type of action. Outside of leaps, though, there really hasn't been, again, I think the best adjective, the best word I can think of is appetite. There just hasn't been that appetite out there. Like, I'll give you a name there's been an appetite behind. BP, right? Like where they call buyers just keep showing up like they want more, they want more, they want more. Not just one sweep and disappear. So that appetite has been non-existent. Now, yeah, a couple of you had a great point. You're in the holiday time of year. A lot of names have already exploded. So it's not all that surprising. But I think that if I could explain what the flow has looked like over the last few weeks, a lot of retail speculation and a lack of appetite in general, overall. It's just not much of an interest. And, again, I get it because I'm having a tough time trying to even just early stages get excited about anything here. Because again, it's a tricky backdrop right now, right? But it can change. Right, Sahil. Again, Sahil hit the nail on the head. Like that should be your outlook. Okay. Sometimes you can't. Sometimes you end up nailing it right. You buy leaps, and it ends up you're never underwater. Okay. But most people, when they buy leaps, they buy with the intention of eventually adding if price comes in some more. So you buy in pieces. Because again, it's a little arrogance that you think you're going to nail the bottom with leaps on a name that's seeing aggressive selling. Like, who are you, Houdini? You know? So even if you don't have intentions of adding, you have to kind of take that outlook to it. You know, where, all right, there's a good possibility I'm going to be underwater, right? Hopefully it's not for a long time, but I'm going to be underwater. But you remind yourself, 2026, you know what can happen from now to 2026, for Christ's sake? All right? Think of any key name. Think of this, though, logically, all kidding aside. Any key name that was in a pretty decent correction that we've seen nice size leap buying in, where were they a year from that time? Right? Where were they? More than likely, when we saw the action, you probably didn't buy them right there and then. But where were some of these names? That entry, you would kill for that entry. You know, a lot of times you would kill for that entry. You gotta be patient, and you kind of almost gotta hold your nose in a sense with these things. You gotta hold your nose. But a lot of the key names, a lot of like major names that are in a correction and they see decent leap buying, more than likely the problem is going to be that you get out too early for a profit at some point. That's more than likely how that's going to play out several months down the line. That's the most likely situation. Right? The most likely situation. Quantum is poop. No, again, and you guys know me, I'm tech illiterate. When I talk just strictly equities, the market. I had no idea what the quantum computing is. I don't know what it entails. It could be the future. It could be the best thing since sliced bread. I have no rebuttal for that. But what I'm saying is you're going to hear that story. You're going to hear sectors hyped up often. Okay? They're gonna run. They're going to pop. Okay? And then they blow up when it's based on all story. Okay? The real ones, the few real ones that come out of it, will come out of that correction and blow up and continue higher eventually. But they almost always blow up. Think about the EV stocks, right? Was there anything more hyped up than the EV names coming out of the 2021 lows? I mean, there were a million of them. Rivian, Lucid, this guy, that guy. It was ridiculous. Like Tesla wasn't enough. You had to buy 50 of them. Look what happened to those stocks. Now, you get the Fed printing money and basically sending money to retail players who are locked in their house to open up Robinhood accounts. You can get an over-exaggerated bubble like that. Okay? But that's not what we got right now. You understand? Right now, with the information in front of us, that's not what we have right now. Butt plug, right? A lot of those things. Yeah, I don't want to sound too dorky, right? But you kind of want to pay, if you're looking for stocks to like buy and tuck away, there's nothing wrong with buying, a lotto name like I bought the Soon or any of those things, right? You don't want to make a habit of it. Okay, you want to look at the fundamentals when you're putting these stocks away. Even for intermediate term swing trades, you want to see profitability, growth. If they're not profitable right now, they're looking to become profitable sooner than later, at the least. Those end up being the best story stocks. The other ones are just speculative roll of the dice. That's what they are. Nikola, that was a classic. Nikola. But there's nothing wrong trading them. And you guys know, the majority of you know. I love trading those names. I love trading. The majority of those names I usually trade. Even though Quantum, I'm not going to lie to you, Quantum, Some of those moved too fast for me. I couldn't get my hands on. I remember Qbert caught some sweeps. I missed it. I wanted to chase. I didn't. And before you know it, it was like gone. I really didn't own much of the quantum. I didn't own any swing trades on quantum stocks. You know, I had more of like the AI related names and stuff like that. All I know, and everyone and their uncle was down on Zuckerberg, just bought it for the kiddos account. Now she's set. Yo, I bought you're talking about Facebook. That was one of the best moves. Honestly, that was one of the best moves I made too. Now I didn't buy a lot of it, but I bought in my daughter's account. Same thing, Ed. Same exact thing. The Meta. You're talking about Meta, right? It's one of the better investments I've ever made. But I own it a long time now, this Meta. You're talking about a little more recent, I think. But I own that in my daughter's Parkaway account, you know, where I can't sell it. Otherwise, it'd be long gone. Oh man, China. I honestly, guy, I don't even know what to say. I mean, listen, I own some of these, not a lot. I should add to these because this is what I wanted to do, add. But I'm losing money in this right now. CHAU, I bought May calls and I didn't sell like an idiot into that gap up the next day. But you know, I wanted to have some China exposure, right, where I put in what I'm willing to lose with some time, and if they happen to start doing real QE, you know, you get one of these bad boys, you know. So that was my game plan, but you know, now holding this thing, I'm definitely obviously losing all the money there. The other one is this yin. They've been playing 2021 calls from time to time. But let me tell you, if the selling does accelerate from here, these things can snowball a lot lower. But you put in what you're willing to lose, and this is what you're hoping for, right? This is what you're hoping for at some point between now and 2021. Other than that, I told you guys, and I'm being there. I'd be careful equity wise. I wouldn't play any equity in China. I just don't trust it. Put in what you're willing to lose in options. Yeah. And they already had the head fake where Tepper, remember when Tepper got all excited? Because he didn't think they would go back on what they said. I'm surprised they didn't blow up that market already with them going back again on the stimulus they said. But, you know, this is, I don't know. I really don't know. You know, I think it's, and when you can't find anything in the U.S. markets, this is when we start to look at other shit like this. Excuse my French. There's more than enough stuff to trade in the U.S. markets. You know, China, who the hell knows what goes on there? Yeah, I should have bought the yin instead of the chow. I didn't even realize, you know, and some of you guys in the chat room were in the steam room were telling me that, and I didn't see at the time you guys saying that. But maybe if I do add, that's what I'll do. I'll buy yin. You know, but again, I don't want to get too crazy. You know, lotto type action. Lotto type action. I think you know what I've been doing too of recent, like in recent days. The action in names has been so bad that I've been trading these levered ETFs intraday. I haven't in the last few days because I couldn't even find setups I like there. But kind of when the flow picks up and we start to see a little program buying, I've been trying to scalp like TNA, TQQQ. What else did I play? It wasn't, the Bitcoin ETF, stuff like that. But that's where kind of day trading, I've been playing that as opposed to the names because I can't find anything I like in names. MSTR, Here's the thing, Andrew, okay? And again, if you want someone to be dead straight with you, okay? For me, and people, Sahil will tell you, everybody, Yaya, everybody in the room will tell you, when MSTR caught action, okay, before this big run up, I would make sure everybody knew about it, right? When MSTR caught big action, it wasn't like I was against MSTR, okay? But now, with all the noise and everything Sailor has done, and with all the retail participation, and with the Twitter, the guys on X putting their whole account into MSTR, there is no edge for us at all in this name. Zero. Okay? That's the only thing I can tell you with conviction based off the flow I'm seeing. Okay? Like again, here, and that's why the circle's up here, during all this time, anytime MSTR caught a clean $1 million sweep, and we saw it from time to time, we would see good looking sweeps in MSTR. Okay? It was worth a shot at getting long. Okay? Because they usually would work out well. It was a clean trade. Now, the flow is useless. Okay, because all the hedging that's going on because of these convertibles and shit, you can't even look at it. You can't even look at it. So I have, again, how this ends up, what Sailor is doing, I have no idea. I think it ends up blowing up like everything else. There's no holy grail in this game. Okay, there's no holy grail. When shit hits the fan, when the air comes out of the balloon, everything goes to shit. Even the blue chip names go to shit. Okay? So if anybody's telling me, oh no, MSTR, it's what he's doing, I don't want to hear it. I don't want to hear it. All right? But the only advice I can give you right now regarding it, okay, even for a trade, is the flow is useless. Completely useless. There is no edge. Now, and that's not even me going out on a limb, right? I told you NVIDIA was like that when everybody was playing NVIDIA and the flow was berserk. There's just no edge out of the action anymore. And a lot of times when it gets to that point, when there's no edge out of the sweeper activity, a lot of times that's a topping sign, at least for lengthy consolidation, at the least. Because there's too much interest in it. Right? Like this. Okay? When the semis were seeing that type of action, okay, here, right, didn't mean the semis were a disaster area and they weren't real names or anything. It just meant that there was too much interest on one side. There was too many bulls in the option market. There was just no edge out of the flow. If you saw a call sweep then in NVIDIA or AMD or Avgo, it was like an everyday thing all day long. There was no edge anymore. And usually that's a sign of some consolidation to follow. Now, this MSTR is already in consolidation, right? I don't know how long it lasts, though. I don't know. I have no idea. But there's no edge. That's the main thing. The main point I'm trying to make. All right? You come to this webinar, I think, for primarily one thing when it comes to flow. Whether I tell you there's an edge out of the sweeper activity in a particular name or market, whatever it may be, there's no edge out of the MSTR flow. Zero. Yeah, zero. But again, I don't know what Bitcoin ends up doing here. I'm saying, like, Bitcoin with liquidity doing what it's doing, I'm actually impressed. Bitcoin's been holding up a lot better than I thought it would if we would have seen what's been going on with liquidity and all this stuff here. Yeah. So, I really don't know. I think it's a lot more difficult to be bullish Bitcoin here, but Like I said, it surprised me here holding up. What else? Any names you guys have noticed? I'm curious to see any names you guys are looking at or anything like that. I mean, we have a big list. I know a lot of you are looking longer term. Where is? Hold on. Like, let me show you the last. Here's today's action. Oh, I didn't post it in here yet. This is Wednesday's action. Like, look at this. Both these stocks were down big today, by the way. Both of them. All right. So these were the sweeps on Wednesday that were, again, just respectable size. And you can make the argument that somebody's making a bet. All right. PCG March calls. Now, that's the California fires. You see what's going on there. But at the same time, there's Jan put buying. So you got short-term put buying all around it, and somebody what's a March calls. So maybe they're protecting short-term, going out a little further in time. They're bullish. But that stock got whacked again today with all the other utilities. BTU, you talk about an ugly name. Look at this stock. Oh, look at this thing. All right? So they're buying. Oh, yeah, I get it. 2026 leaps they bought here. So, they got tons of time. So I understand what they may be looking to do here. But this is, look at this. No bid. No bid. But literally, that's my top bet list. And I had to force myself to put names on there. And today, I have it right here. I'll show you the top bets today. And for those of you who don't know, who may not be in the steam room, top bets are not the largest bets that are out there. Okay? Because like NVIDIA will catch larger bets, Meta will catch a large bet every day. These are clean sweeps. Okay? The sweeps that I had the most conviction in for that day, that they're clean directional bets. That's what top bets are. Nothing more, nothing less. Let me post this so you guys can see these. Hold on. Friday today, right? Friday. Okay. So these were the top bets for today. And both these names actually look decent. Both these names look decent. So Bros April 55s, right? Now, the only thing I could say about Bros is there's a possibility. You got Jan expiration next week, and Bros has some decent Jan exposure. So in other words, there's Jan positions in Bros that will expire next week. So what you may be seeing here with the Aprils is whoever's in that Jan position pushing those out to April because they expire next week. Right? That's the only thing I will say on the negative side. That it could be that instead of just a new bet per se. But compared to the other stuff we saw today, much better than anything else we were seeing today. And then you got RH, 100 lot sweep. All right, but look at the dollar amount. That's no piker bet. Look at the wood he laid. In the money Febs. And RH looks okay. All right. Now you also, I don't know if retail sales are going to affect it, but you have that coming up. But that's all there is. Right? We saw like a nice size Costco weekly sweep on Wednesday. They got lucky, caught that same store update or whatever it was, same store sales. That was a nice looking sweep. But weeklies, I never put weeklies on here. I never put weeklies. Here's another name we've seen. Again, not a little. There's some rolling involved though. FTAI, and this thing has been doing well. Look at this. But again, this is not a new name. You know, they bought the dip here, and there's been bull flow. You know, some rolling, but a strong stock. But nothing on the newer side. A couple energy names. I told you BP, pretty impressive action in BP. Had a nice little run. I don't know. Anybody else? Some of you steam room guys notice any flow? You know, again, not spec action. I'm talking about like decent appetite, legitimate buying. Anybody notice anything that I'm not mentioning here? MBOT. What's that giving? I don't know. MBOT. Let's see. Oh my goodness. What is this? Yeah. These. Well, this is what I mean. Look, you got a dollar stock that went to 4, and now it's back at 2. You know, what's likely going to happen is you probably get this. That's what's likely going to happen. All right, that's what usually happens at this point. Okay, you get a rally. All the specs who like it think it's, oh, here it goes. You get a pull, get some shorts, getting them involved, thinking, oh, it's going to 0, and you kind of just flagging here. But then eventually the volume starts to dry up, the interest starts to dry up, and then you get to dribble the clock out. But like, what is this? I don't even have to look. Let me see here. What is this? MBOT. Okay, so MBOT did a whopping 0 in revenue this past quarter. How much? 0. Nada. Zilch. No revenue. Nothing. Okay? So whatever micro bot they're making over there, they can't sell any of them. So outside of speculation and reeling in the riffraff, why should I buy this name? Give me one reason I should buy this name. Because my gasoline attendant told me he bought it? Like what? Give me one reason. You know, it already went from $1 to 4. Now I feel like a sucker if I buy this thing. You know that? I feel like exit liquidity. Yeah, Sens. Yeah, it's funny because I totally ignored it today thinking it was SES struck. You know? But, you know, it's going to be a needle in a haystack, these things, these speculative names struck. They're tough now. They're tough. Yeah, they're tough. Yeah, I don't know, you know, if you're looking to take a little shot or what. You know what I mean? If you want to buy it and, you know, it pulls back down to 55 cents and you're pulling the plug, that type of trade, then you buy it. I don't want to talk you out of it, but you don't want to put on any real size. You know? Again, the names struck, all the names that we played recently, like SES, it had more to do with the pack, the group, everything that was happening in all of those names, not the stock specifically. You understand? If appetite starts to wane for these things, it doesn't matter what the story is. It's just not going to benefit. Like this, look here, let me give you an example, right? By the way, you guys know I sold my Soon. I actually made a decent sale for once in my life. Soon, right? Soon is the same stock. Okay? Same stock. But like, think of this, where we initially played it, Sahil and I. We bought it here, had the rip, we sold it, right? That's where I left my position behind all this time. Okay? But look what happened to Soon after that. Okay? So, Now, you're buying soon here instead of here, and you're getting caught in all this. What good is that? You know what I mean? Think of it. February, March, April, May, June, July. You finally got back to break even in July, and then the thing took another shit on you. You know? And then, again, down the line, 9 months, 6 months, a year, whatever it may be, maybe they get hot again. You understand? Maybe they get hot again. But that's the point. Like, the point I'm trying to make here is we want to get involved in a more aggressive way here and here, right? In some of the earlier names. And then when they're on like quantum name number 8 that they found, you're usually towards the end of that now. You're at the end of it, where less of them are working out. More of them are rolling over. And that's the problem. The problem is that you don't know, even if you like the name, you don't know how long this consolidation can last. Because these moves are so big. Like Soon went from $1 to 8 in this run. 8 times. And then had to do all this. And then here went from 6 to 24. You know? Yeah, it may, again, I don't know, like Soon, maybe it goes dead here again for another year and a half and then goes to 80 if the AI bubble inflates even more. It's possible, right? I have no idea if it's the end forever, but there's a higher probability when you get to this point where so many names are involved and now you're not seeing any new action. It's the same names over and over predominantly. You're closer to some lengthy digestive mode in all actuality. So to answer your question, Struck, you have a lower probability of success in ascends now for where we're at. You understand? Where 3 weeks ago, a month ago, we'd all be all over this. Like it wouldn't even be a question. We'd be like, who bought Sens today? You bought Sens? You bought Sens? You know what I mean? Like we all would probably be in Sens. Now again, the more it's just a lot more difficult now. It's a lot more difficult. How long that lasts, I have no idea. I don't know. But once this digestion or corrective phase, whatever it may be, runs its course, you're not going to want to buy Ascends or these zero revenue names. Once the correction is over, what you're going to see real names start to lead. Right? So you're going to have pullbacks on real stuff or even new growth names, real names that are seeing action. Not some cockamamie lotto ticket with zero in revenue. Yeah, different, exactly. That's the main thing, the different environment. Unfortunately, we don't know when that environment comes to an end. There's no way of knowing for sure. Like I said, let's say something blows up over something economically, I'm saying blows up. Overseas, there's a credit issue, or in the UK gilt market, or something like that, and the Fed's got to become easier again, or financial conditions got to ease, anything like that. And now all of a sudden, you got a different climate. But, you can't predict that. So you got to kind of just wait it out. I know, I get it. No, but we all don't like to do nothing, But even if you do, like even if you need to do something, you really just you want to make sure you size down and don't get hurt for no reason. You know, like look at Gibbon. He basically mentioned 55 pink sheet stocks in the last 10 minutes. This Gibbon Algador, right? Like he literally has rattled off 50 pink sheet names in a row here. Yeah, have a good weekend, brother. I listen on the long side, right? I think the playbook again on the long side is playing for these tactical squeezes. You know, playing for these tactical squeezes. What do I mean by that? I mean, here's an example. Next week, we come into next week. Okay, you got economic data all over the yard. You got the CPI, PPI. You got all sorts of things. Let's say futures open up down, kind of similar to what we have now. We're flat. Okay, we start to see call sweepers step on the gas a little, even if they're weeklies. Who cares, right? But they're starting to get aggressive, buying Tesla weeklies, Microsoft weeklies, Amazon, whatever it may be. Okay, so you're seeing a pickup in the flow. Then you're seeing stuff like VVIX start to sell, right? Because of the sentiment backdrop, you can catch a nice squeeze there. You can catch a nice squeeze. Now you got some cushion. You want to take some off the table and leave a runner, right? You leave a runner. But I think that's the playbook now for this climate. That's the playbook. And looking for some hidden gem, per se, in names. That's the playbook. You know, we want to try to take advantage of snapback moves that catch the shorts, the tactical shorts leaning to one side, right? So this, kind of like this. Yeah, so we're probably down here in this neck of the woods now. And, you know, again, even if it's, you know, a rally that's going to find sellers, down here there should be enough of a snapback that it's worth trying to catch. You know what I mean? Like this recent one here. Right? This recent one here was this. All right? You got this and this. So you get these snapback moves. But, you know, if the things we looked at to start the webinar continue to be at play, you're going to likely get that lower high situation until it changes. You know, but here, right, when these squeezes happen, you got a lot of room. You don't even need all that, right? You take half of that and you're happy. So that's what you got, in my opinion, that's the playbook for this particular climate. You can't have the same playbook that we had coming out of the summer of last year. It was completely different. Completely different. Completely different. You know, and hopefully what happens is you get to a point, right, where this goes on long enough that some of those intermediate term sentiment positioning levels, they start to really come in. And that's what sets up that sweet spot squeeze entry. You know, kind of, again, the last one we had was 2023, realistically. This one here. Oh, what the? How do I get this off now? Who cares? This right here. All right? So you got down, squeeze. And you got another down, little relief squeeze. All right? And then another one here. At this point here, everybody was so bearish that it lined up a really nice, really nice low there. A low that there's enough bearish positioning that these lows at the least should hold for a period of time, a lengthy period of time. Even if you don't get a big move like this, they should hold, right? So like if you remember, even the 22 bear market, it was tough because the upside was tough, but there was more than enough bearish positioning for the lows to hold right here. And then you had another one here, right? All right. So see, at this point here, and you guys remember it, you couldn't find a bull anywhere to be found. All right. The tough part was, okay, are you going to get a squeeze like this, or is it the bottom? It's hard to make the case for the bottom because of how bearish everything is. I know I couldn't, but at the least you get a nice floor put in. We're too early in the selling to make that case now. We like this is barely even a sell-off here. But I think now the playbook for now, until we see some of the things that we talked about at the start of the webinar change, you want to play for this here. You want to play for these squeezes. So going into next week, that's kind of what we should have our eyes on. However you want to do it. Levered ETFs, some SPY calls, SPX calls, whatever floats your boat. Names could be trickier, though. That's my point. Okay? Because what you could get, like we've seen, you could get a decent snapback, but that name that you bought doesn't really snap back. And that's really frustrating. Right? So that's the difference in the environment that we're in now as opposed to coming out of the summer of last year. Right? We were more focused on names. We wanted to find names. That's where the alpha was. That's where you outperform. Here, I think the names are the tough part. The names are the tricky part here. Because the market could squeeze and that name doesn't participate. Right? We've been seeing that, a lot of that. Right? You get a market squeeze and the home builders are making new lows. Right? Materials, can't bounce. Quantum stocks chopped in half. You know what I mean? So the playbook is playing for these tactical squeezes off pulls and sentiment signals. Again, it's not easy, but that's ultimately what we want to be looking at. More like pink eye and the pink sheets. Yeah, those penny stocks, guys. Yeah, that's not where you want to focus. You want to make your money and get out of those penny stocks. You don't want to fall in love there. You like one, find one you made some money with, tuck a little away, hold your nose, close your eyes, and don't pay attention to it. But in my opinion, that's the extent of it. All right, boys and girls. Oh, you know what? I never put this on live chat. Did that affect anything? I don't know. Anyway, enjoy your weekend. We'll see how they lay them out next week. Again, you got a busy schedule next week. Did I post it in here? Oh, I didn't post it in here yet, the calendar. You got a busy schedule next week. I think you got the CPI, the PPI, you got retail sales. And then the following week, I think banks start up earnings. We'll go into earnings season. The guy pumping pink sheets is saying I'm pumping trash information. That is the funniest thing I heard all week. That is hysterical. Where did that go? When was that? Earlier? The guy pumping pink sheets is telling me I'm pumping trash information. Because I shot down his pink sheets, that's why. And Trump inauguration, yes, you're right. That's here before you know it, too. Jeez. Got a lot of things going on, man. A lot of things. So you put your trader's cap on and, try to lean off weakness. Be careful chasing strength and be nimble. Be a little more nimble for now. Oh, you kicked him out, Mary? I wanted people to see it. That was hysterical. He literally he listed 50 bulletin board stocks, and because I shot him down, he said, I'm pumping trash. That is funny shit, though. Yep, same, guys. Have a good weekend. Stay safe, everybody, especially those in California. Okay, enjoy the weekend. Relax. We'll see how they lay them out next week. Be good, everybody.